Bring back the IPO. Yeah, I want old school Wall Street. I want a return of old school Wall Street. Well, what's that going to take? Well, we're going to have to start erasing a lot of rules, not just Dodd-Frank. I'm going all the way back to Sarbanes-Oxley. That's right. And I called this. This again. George W. Bush pushed this thing through because we had the dot-com collapse and you had to do something. Congress had to do something. And what they did was they destroyed the IPO market. And again, it hurt you. There's a story talking about the IPO market and the decline. They're saying in recent years. It's not recent years. Okay. This is 25 years, 2.5 decades. It's been wrecked. Fewer companies going public. Take a look at the amount of listed companies today compared to the way it was back in the 1990s. The way companies were funded have completely changed. And has it benefited investors, American investors? No. There's been some good ones. Sure. But let me explain to you. We're going to go back in time. I want to talk about the way things were from the younger people. Back prior to Sarbanes-Oxley, prior to repealing Glass-Steagall, there was a myriad, many investment banks on Wall Street. Some were good, some were crooked. From the movie Wolf on Wall Street, there were other ones out there as well, but they were more penny stock operators. Companies would raise money. They go to Wall Street, this old school Wall Street, go there, raise money. This is what we want to do. Morgan Stanley, Goldman Sachs, a lot of different firms, DLJ, so many of them, Brown Brothers. There was so many to go to. This was our idea. They put together a prospectus. Okay, they get intentions, do the roadshow, get people to fund it, and the stock would trade. Some would make it, some wouldn't. And, my desk would have a pile of various different companies going public, and it wouldn't take me long. I could take a look at the business plan. I'm like, this ain't going to make it. This one ain't going to make it. And then during that time, during the 1990s, everyone was goo gaga over IPOs, anything with a .com attached to it. FOMO was, I got to get involved because, hey, many of these companies would pop on the first day. They'd be hyped up in various different publications. The internet was a new novel thing. There were message boards out there. CNBC was on every television, everywhere. Every pizza parlor. And again, everybody was all in because everything was going up. Again, I knew that there would be fallout because, again, people went nuts. They did stupid things with their money. They were chasing companies that had little to no value. But some did. And the difference between back then and today is back then, you could have gotten in. You could have gotten in the infancy stages of this company. You might not have gotten in at the IPO price, or maybe gotten a little bit of the IPO, but you didn't have to wait 10 years. See how the investment banking market works today with private equity and how they go about doing things is essentially they ladder these companies up with multiple rounds of financing for years and years and years. And they get more financing and another round of financing and another round of financing. And the ultimate goal is taking it public at what I feel is an absolutely moronic valuation. And who buys at that moronic valuation? You do. They're selling to you after they basically have run the thing up to the moon. Need to get away from that. We do that, I think we're going to have a much more dynamic market. I'd love to see more companies being able to go to Wall Street and say, hey, here's my idea. I want to raise some money. Away we go. It was an exciting time. And yeah, did it get out of control? Damn straight. We saw it coming. We wrote columns, yield, hold on, Icarus in the stock market. Listen, some of these companies are good. But even some of the companies that I avoided because I wasn't sure. I always give the example. Amazon. And I invite you, go online and take a look at Jeff Bezos back in the day with his cardboard Amazon sign at the wall, stuffing boxes himself with books to ship out. A lot of retail, online retail back in the 1990s. I remember ordering music from CD Now. Yeah, I didn't like the whole, that again, kids are not familiar. There was a file, they called it file sharing service back then. It was called Napster. Eventually got put out of business. There was Kazaa. There was another one too. And I'm like, this is just stealing. They just put this stuff online and recording it. And you're stealing people's music. I said, this is not right. This is not fair. They eventually had to deal with that. I think Metallica led the way on that one. But anyway, neither here nor there. There was CD Now. There was pets.com. There was all sorts of companies. And I didn't know what was going to make it. Now, Amazon, they figured it out. Hey, why just sell books? Let's sell everything. And then again, went into other areas of business, the Amazon website later on down the line. But the reality is at least you could have gotten in at a very, very low price back in the Google, all of these companies. That's no longer the case. I been searching for various different VC funds, alternative investment funds for our clients, and it's difficult. It's very hard for me to kick the tires on these things to see what they have in there and the various different rounds and where they're at and whether or not these things are going to eventually even make it. If they're going to be able to take them public, and they're marking these companies to market at their own mark. At least when they were trading, the market would dictate what the share price was. And yeah, was it volatile? Absolutely, but that's okay. We need to get back to the old way of doing things because, honestly, people, it makes our country more dynamic. It makes Wall Street a hell of a lot more fun. There's a myriad of different ways that people can gamble their money away. And we spoke to people all the time. Even the IPOs back then, you had to be what they called a sophisticated investor at that point in time to even participate in some of these things. And yeah, there was private placements and earlier rounds of financing, but nothing like today. Not this 8-10 year nonsense that's going on. Basically right now, and we're going to discuss this at length this weekend on the radio show. The venture capital market is it's getting ugly, folks. They're trying to find ways out. Everybody's looking for exits, and they can't find any. WatchdogOnWallStreet.com.